Hi everybody, Lance from thetatraders.com here. In this video, I put a little bit of a spin on the 112 strategy where I have quite a bit of a hedge in place here. It doesn't have much of an initial credit, but it does have a very good chance of it getting a pretty decent profit for the amount of buying power that we have. So this trade, I'm going to show you exactly how I set it up, how the Analyze tab on Thinkorswim looks in this trade. And if this video is helpful for you, click like, share, subscribe, all that good stuff. Helps out the channel. Appreciate all your support. And let's get right to it. All right, so this is the trade that I posted at thetatraders.com. Did a slight improvement when we're doing threads now. So I'm saying the name of the position, the type of strategy, and the date. So it's easy for other members to follow along. You just click on the thread there and see it. So for this trade, we did a 112, but I did a PDS, put debit spread. That's very close to at the money at the time. And the naked puts paid for it with a slight net credit. So I took a vertical PDS here, bought it for 17.75 debit. Then I sold two naked puts at 9.75 and really far out of the money at 33.50. So it was a delta of 0.03 for the trade. If you look at the numbers here, we took in 9.75 times two contracts, 18.5 total credit minus the 17.75 debit. We have a net credit of 1.75 in the trade. It's a 5 multiplier. So we're looking at a big, juicy $8.75. Essentially, it's nothing when you look at commissions. So what did I actually place this trade? At possibly worse, I break even. Obviously, we could go much lower than the naked puts, but it's a 0.03 delta. The odds of that happening are literally 3%. And the odds of this actually not getting any profit is even less than that because of that put debit spread. So let's look at the Thinkorswim Analyzer tool to see why I actually placed this trade. All right, so here's the Thinkorswim Analyzer tool, and I entered in the position that you see. There's about a 51.7% chance that this makes pretty much nothing, and that's if the market stays where it is or goes anywhere up. However, there's about a 48 or so percent chance, about 43% chance that actually hits this top profit here. About a 5% chance it might be somewhere in between it, and you would make a slight amount of money. But on the bottom, if you look at the bottom green here, a little hard to see it, but you can make a total credit of $241.25 if it gets anywhere from 43.50, much anything less than 43.50, all the way down to about 33.50. We can move this chart here to show when I'm not getting the max profit here. There's a 0.07% chance that it's going to go all the way down to this 33.50 when MES is around the 43.68. So really good chance, about 40% or so, that I can actually make a good amount of money, $240. This trade uses quite a bit less buying power because of these strikes. So we're looking at about $400. So $398 in buying power. Leave about 402 in cash. So we're looking about $800 total. If you can make $241 off about $800 total buying power plus cash, we can get a 30% return. And in this trade, I did it for 102 days out. So a little bit over 3 months, we can make 30% on this trade. So that's some of the pros to this. Again, there's a pretty decent chance we could get somewhere in this really long max profit chart. So would I be placing just this type of trade and no other trades and just have a bunch of possible hedges that win? Not necessarily. Still want to do some trades where you're taking in a good credit. A lot of the trades I do, especially the 112, usually gets around 3% a month in your credit. And I'm also adding on slight hedges to it by buying about 14 days out ES puts with it. That's based on the whole account size. So I'm still okay making about 2.75% credit in most of these trades. You should consider doing a couple of these, especially if the market is pretty volatile and there's a chance for it to drop quite a bit. Because if it hits that trap profit at the very max, so that chart that we saw in the analyzer tool, it's not going to hurt your buying power as much as if you didn't have that trade on, because you have that put debit spread that could be in the money relatively quickly. So again, if you're interested in trades like this, looking at different strategies, I'm going to be considering more than 50 width on the put debit spreads as well, and other strategies with the 112. You can join a free 7-day trial at thetatraders.com. I'll show you all the trades we make. I could help you one-on-one with this. And there's a group of about 200 other option sellers that are very like-minded and willing to help out as you need to. So again, Lance from thetatraders.com. Thank you for watching this video, and I'll see you guys in the next one.